Welcome back to our virtual Bundesbank Autumn Conference on Banking and Payments in the Digital World. I hope you enjoyed the first two papers and are now looking forward, as much as I am, to the highlight of the day, the invited remarks by Christine Lagarde, President of the ECB. Had this conference taken place in Berlin, as originally planned, we would now be having dinner underneath the impressive dinosaur skeletons of Berlin's Museum of Natural History. Unfortunately, we don't have the technical abilities just yet to replicate this setting in the digital world. But technological progress is fast, so who knows how much more similar virtual conferences will be to the real-life experience a few years from now. As we have already heard today, fast technological advancement is also a key driving force behind the digitalization of money and payments. In many countries, cash is already being used less and less, and instead mobile payments are on the rise. This makes some observers expect, or even fear or hope, that cash may become extinct, just like the dinosaurs that you should imagine we're sitting under right now. Of course, this and related developments pose a formidable challenge to central banks around the world, which is why we're having conferences like this one. And so at this juncture, it is particularly interesting to learn what the leading central bankers think about these issues. With that, let me hand over to Bundesbank President Jens Weidmann, who will now personally introduce our virtual dinner speaker, Christine Lagarde. Jens.
Thank you, Emmanuel. Ladies and gentlemen, a very good evening or good morning, wherever you may be joining us from. Following on from this first highly instructive session at our autumn conference, it's now a great pleasure and privilege for me to welcome ECB President Christine Lagarde. Chère Christine, bonsoir. We are very grateful for you to join us today, shortly after your press conference on today's Governing Council meeting. Last year, at your first press conference as ECB President, you said, and I quote, "I'm neither dove nor hawk, and my ambition is to be this owl that is often associated with a little bit of wisdom." I'm not here to take a deep dive into ornithology, but let me just say that in the dark, where others lose their bearings, owls have outstanding eyesight, and they also have excellent sense of hearing. That brings me back to your first press conference, where you stated that we should not just be preaching the gospel that we think we master, but also listening to the views of those to whom we are reaching out. Placing increased emphasis on listening to the public is undoubtedly one of your main achievements so far as ECB President. The ECB Listens portal and the upcoming ECB Listens event are key examples of the change in communication culture you've set in motion, as, by the way, is the reinvigorated spirit of collegiality in the Governing Council. But you have also launched a strategy review with the ambition from the outset of leaving no stone unturned. Then the COVID-19 pandemic interfered with this in-depth process, and for good reason, the conclusion of the strategy review was postponed. Combating the coronavirus crisis took precedence. In a crisis of this kind, fiscal policy has to take the lead. Monetary policy is not in the driving seat. But providing ample liquidity to banks and keeping an expansionary monetary policy stance are important contributions too. They help prevent the financial system from pushing the economy into a downward spiral that would endanger price stability. Of course, one can take different views of how the specific monetary policy measures are designed, but undoubtedly the Eurosystem's determined response contributed to overcoming the economic fallout of the pandemic. Another achievement, and one that brings us to the subject matter of our conference, has been the establishment of a high-level task force on central bank digital currency. The crisis may have changed the overarching agenda, but the topic of digital payment solutions is as cutting edge as it ever was. Indeed, the pandemic has tilted consumer behavior towards contactless payment, and whether the shift will be permanent remains to be seen. Also, the private initiatives to offer digital means of payment, like the project launched by the Libra initiative, have been further advanced, highlighting the demand for an instantaneous, internet-ready means of payment and the need to keep the payment systems that we central banks own up to speed. This notwithstanding, I'm sure that cash will continue to be an important payment medium for the foreseeable future. One particularly interesting example of cash is the Greek €1 coin. Its national side shows the owl of Athena, which was depicted on an ancient coin. The little owl associated with the goddess Athena became a symbol of wisdom, maybe the little bit of wisdom that you, Christine, were referring to in your first press conference as ECB president. So we are now very impatient to hear what you have to say. Christine, the floor is yours, and welcome again.
Well, thank you so much, Jens. Merci beaucoup pour cette introduction. And there is no doubt that collective wisdom can be developed through events such as the one that is organized by Deutsche Bundesbank, this conference on banking and payments in the digital world that I'm very, very proud and privileged to participate in. Thank you very much for the virtual dinner. And I'm progressing in my remarks with in mind the fact that dinosaurs are just checking on us. A little over a century ago, it was George Bernard Shaw who said about money, I read, "It is the counter that enables life to be lived socially. It is life as truly as sovereigns and banknotes are money." So according to George Bernard Shaw, and as true as it was in his days and as true as it is today, money facilitates transactions and relationships and is also an expression of sovereignty. In the digital age, innovation in payments enables us to interact in easier, faster, and cheaper ways. But the innovation comes in new forms as well, based on private payment systems or using digital currencies, which creates new risks and pose important questions of sovereignty. These issues actually go to the heart of the ECB's mandate. They raise new questions about whether the ECB should drive initiatives to integrate retail payments in Europe, and even whether it should issue a digital euro. We have a duty to play an active role in balancing the risks and benefits of innovation in payments so that money continues to serve the Europeans well. So tonight, what I would like to do is address two trends. One, which is the changing consumer demand and the preference of the consumers. The second is the competition to dominate payment on a global scale. And then I would like to argue that we cannot afford to be bystanders to these trends, and that the Euro system must actively advance European initiatives to strengthen European payments. So let me address the two trends that I have just mentioned. The first major trend that you, Jens, alluded to is the changing consumer preferences. The digital revolution is transforming our lives in fundamental ways. More than 4 out of 5 Europeans regularly use the internet today, as compared with 1 out of 5 only 20 years ago. This has had a profound impact on how we communicate, how we spend money, and how we work. Clearly, the COVID-19 pandemic has accelerated this trend towards digitalization. E-commerce, which has grown steadily in recent years, increased by almost a fifth in terms of volume of sales between February and June 2020, while indeed in-store sales declined. And as our lives have suddenly gone digital, so have our payments. There has been a surge in online payments and a shift towards contactless payments in shops, sometimes for reasons that were not necessarily accurate. So it is natural for people to expect and embrace changes in the way they pay. According to the ECB's new payment survey, cash remains the most common way of making small retail payments, with cash payments accounting to 73% of all physical retail payment in 2019. Now, that number might change in 2020, but 2019 was only last year. However, almost half of consumers said they would prefer to pay digitally, and this has increased further as a result of the pandemic. This trend is unlikely to be reversed, even if and when the pandemic is over. A large consulting firm, which will remain unknown, has consulted Europeans in 17 countries. Their survey shows that a vast majority of consumers expect to continue to use digital services as often as they do now, or even more often. In other words, the pandemic has served as a catalyst to accelerate the transition toward a digital new normal. That is the first trend that we observe. The second major trend is the harsh competition to dominate payments on a global scale. Payments are subject to strong network effects. It's a bit like the telephone back many years ago. If you have one user of a telephone, it makes no sense. If you have multiple users, then it makes a lot of sense. The same applies to payment system. The more users a payment system has, the more attractive it becomes to new users. Scale matters. It limits the field and inevitably leads to just a few service providers dominating the payment markets. And in that respect, Europe has fallen behind in this competition. The lack of payment integration in Europe means that foreign providers have taken the lead. Oh, this is not necessarily a concern, might some say, as long as foreign firms are accountable, subject to appropriate regulation and oversight, in accordance with the principle of same business, same risk, same regulations. Yeah, but the evolving global context and rapid technological progress are changing the nature of the risks that we are exposed to. We are seeing an increase in protectionist policies as sanctions and even exclusion from payment systems in recent years have shown. This presents new risks of payment disruption, especially for jurisdictions that overdepend on dominant system providers. Europe actually had a taste of the potential risks in the summer of 2018. Outages at international card providers left millions of Europeans temporarily unable to foot the bill and to pay for their goods and services. European payments are also affected by technology firms driving the digital transformation of global payments. These firms' well-established user networks give them a unique advantage in the payment industry. Currently, more than a quarter of the world's population are active users of Facebook, which could give its Libra project, mentioned earlier, a global footprint from day one. And it is not unlikely that other large technology firms with an equally large footprint could enter that field as well. This has great potential to drive competition, to improve payment solutions, and to support financial inclusion. Yes, but it could also magnify a host of other issues, ranging from abuse of market power to ownership of critical data. It could also make it more difficult to combat illicit activities and ensure operational resilience. And more importantly for us, so far unlikely, if the bulk of payments are made using digital wallets rather than bank deposits and are denominated in private digital currency with weak links to sovereign currency, monetary sovereignty could be weakened. In a digital world, consumers must have the possibility to pay with sovereign money. In China, for example, within a decade, payments have shifted from cash to mobile payments, which are controlled by two large private technology firms. The planned introduction of a public digital currency can be seen as a means of managing the risks of this digital transition in order to maintain trust in payments. State backing is essential for there to be trust in payments and money. Money held in bank deposits can be seen as a form of private digital currency, but it is widely used because people trust that they can readily convert their deposit into central bank money. In the euro area, these deposits are also insured by guarantee schemes up to an amount of 100,000 euros per account, effectively making them public money. Private digital currencies would not necessarily allow the same kind of convertibility and are unlikely to have the same state backing. Without a monetary and regulatory anchor, the stability of payment systems would essentially depend on the safety of private money issuers. Now, people are clearly aware of these risks. A recent survey by the Official Monetary and Financial Institutions Forum showed that central banks enjoy a higher level of trust than commercial banks, credit card companies, and technology firms, including as potential issuers of digital currencies. So what are the implications for European payments? Well, first, we must ensure that how we pay and the systems that support our payments continue to modernize along with the people who use them, our European consumers. In other words, here at the ECB, we see it as our duty to ensure that people have access to riskless, low-cost means of payment, as well as state-of-the-art payment services that reflect our changing economy. Second, given our size and influence, in Europe we have the responsibility to ensure that our citizens have choices and cannot be excluded from payments ecosystem due to the unilateral actions of others. We need to ensure that European payments are fit for a global digital economy so that in the face of changing risks, we can preserve the autonomy of European payments. The Eurosystem has already reacted to technological change by launching initiative back-end payment solutions with a pan-European reach, such as the Target Instant Payment Settlement, otherwise known for the experts as TIPS. But we know that the private sector, by contrast, has made far less progress on delivering a pan-European solution for retail payments. 10 European countries today still have domestic card schemes that do not accept cards from other member states, despite major efforts to integrate payment networks in Europe. And only a fraction of the more than 230 innovative fintech solutions available last year were usable for all of the most common daily transactions online, in shops, and peer-to-peer. So the Eurosystem has set out its priorities, which are reflected in its retail payment strategy. It offers a conceptual vision for engaging the private sector to fill the gaps in our payment ecosystem in ways that promote financial inclusion and cohesion within Europe. The new EPI, which is the European Payment System, launched by 16 European banks, including major German ones, is an important part of this. This initiative aims to offer a pan-European payment solution that is secure, that is cheap, widely accepted. It will leverage the ultra-fast TIPS infrastructure that I've just mentioned, which allows to settle payments in real time at any time of the day, every day of the year. It also offers advantages from the perspective of European autonomy as a complement to international card providers. In other words, it increases our resilience. But alongside private sector solutions, central bank must, in my view, anticipate change. They not only need to look closely at the benefits that digital innovation can bring, they also need to examine the significant risks they pose and be prepared to innovate themselves. This is the starting point for the discussion on whether the Eurosystem needs to introduce a digital euro or not. Introducing that digital euro would allow the Eurosystem to be at the cutting edge of innovation. In theory, a CBDC, central bank digital currency, can be designed for wholesale or general purpose use. Digital wholesale money is not new, as banks have been able to access central bank money for decades. But new technology can be used to make settling financial transactions more efficiently. It also opens the possibility of a retail CBDC, which would be very innovative in that it would be accessible to a much wider audience, but it would be subject, in our view, and in the proposal that we're working on, to three key considerations, and I will finish with these three considerations. One, maintaining access to central bank money. So the Eurosystem would continue to ensure that all citizens have access to banknotes at all times. A digital euro in any event would be a complement to, not a substitute for cash. Together, they would support financial inclusion and offer a choice to consumers. And this is in line with our policy of respecting consumer preferences when it comes to means of payment. While helping to address the consequences of a decline in the use of cash, particularly accurate in certain countries in the euro area, a digital euro would also ensure that sovereign money remains at the core of European payment systems. And it would support innovation by providing an alternative to private forms of money for fast and efficient payment in Europe and beyond. Second consideration for introducing a digital euro is that it could create risks that need to be carefully assessed and guarded against. If significant amount of bank deposits move into a digital euro, that may fundamentally change the role played by the banking sector in financing the economy, which would have implications for how we at the ECB implement monetary policy and support financial stability. We need to ensure that the digital euro, in the event that it is introduced, is designed in such a way that it contains such risks. Third and final consideration is that the digital euro would need to be designed to meet public's demand for digital payment without discouraging or crowding out private payment solutions. It would have to embrace the respective strength of both the Eurosystem and the private sector to ensure that the payment landscapes remains competitive and innovative. The Eurosystem so far has made no decision on whether to introduce a digital euro or not. But like many other central banks around the world, we are exploring the benefits, the risks, and exploring carefully the operational challenges in doing so. The findings of the Eurosystem Task Force are expected to be presented to the public in the coming weeks, followed by a launch of public consultation. And I hope that many of you who are currently listening will participate. These efforts form part of our readiness to face the ongoing digital transformation in retail payments, which does not necessarily follow a linear path. As Rudy Dornbusch cautioned, and I think it applies very much to what we have been discussing and what I have been commenting upon. In economics, things take longer to happen than you think they will. And when they happen faster than you thought they could. Central banks, in my view, can and should, within their mandates, be agent of change and fulfill their responsibilities towards their citizens. Thank you very much.